Yo, what's up, everyone? It's your boy Looney. Before we dive in, quick shout out to my Discord. I have a free community and a paid community. The free version has news and other chats and updates, and then a paid version has trade alerts, live sessions, and strategies like the one I'm about to go over, where I give some trade callouts. But all the links are in the description. Check it out. But today we're going to talk about covered calls and why they are a great strategy for 2025. First off, we're just going to go over what exactly is a covered call. You could actually learn about it when you go to trade options. And I believe here, if you click on covered call and you hit this question mark, it might be a little different depending on what device you're on, but it goes over on here and it is a little confusing the way they explain it. You won't truly understand it until you start doing the strategy. But in basics or basic terms, it is when you own 100 shares of a stock and sell call options against those shares. By doing this, you get that premium collected up front, which acts as some extra income. And then also this can cushion your portfolio during dips and boost returns during sideways or slight bullish markets. If the stock goes up, your call might get exercised. So I have a bunch of different calls running, and I already collected the premium for them. They went in my buying power. I put that buying power into other options, but you get that premium up front. You can see these are all different strike prices. So if the stock trades above that strike price, you get assigned. And what does assignment mean? That means that you lose the shares, but you lose it at whatever strike price you are. So depending on your cost basis, that depends if you got a profit or not. And also, depending on how many premiums you've collected over time, is a good indication of how profitable your entire position was. I'm actually creating a option selling tracker, and I'm going to release it to premium members on my Discord. Another quick shout out to that. But not only do you get those gains, like I said, you get plus the premium you collect. So if the stock doesn't hit this strike price, but still goes up, you get to keep the premium that you collected and also your shares. You get to keep those shares. On the other hand, if the stock drops, the premium you collect, you still get, and it helps offset some of the losses. So it's not a perfect hedge, but it's a great way to reduce the impact of market dips while staying invested. It actually, if you were to look at it, or at least the way I look at it, it brings down your cost basis, your average cost, brings that down. It doesn't show it on Robinhood, and that's why the tracker is pretty good for that. And essentially, you can get your position, your average cost to be zero. So it's pretty interesting how versatile this strategy can be. So why is it so effective in 2025? Volatility creates opportunity. You could see there's a massive pullback. There's been a bearish signal for the past week. So it's very good for protection. With the market swinging, premiums become higher because of that, because of the volatility, which means more income. Because remember, you're collecting premium. So the higher the premium, it's better. Number two is steady returns. So if the market is uncertain or flat, because although we're getting a pullback, this pullback is quickly corrected. So it ends up being a flat kind of market. This strategy lets you generate consistent income without needing big moves in the stock prices. Number three, it is low risk. It's more conservative option strategy compared to doing some kind of naked call or naked put. And it's perfect for navigating unpredictable market. So of course, this is not perfect. In a strong bull market, your upside is capped at the strike price. So you might miss out on bigger gains, but you can roll, which is what I do. I always roll if I'm in the money. You can clearly see I have a bunch of these that are in the money. This $11 one is below the current stock price. So I'm going to roll this one out. Not just yet. I'm going to wait it out. But that's what happens when you're in a bull market. But in a steep bear market, they won't fully protect your portfolio from major losses, but they are a help. Today, the markets are closed, January 9th. They're honoring President Carter's death. So market's not open today, so you can't really tell. But yesterday, my options were up 176. And yeah, so it does help. Okay, so while profit cars aren't the ultimate hedge, they're smart and they're flexible for 2025. They let you generate income and manage risk in both bull and bear markets. If you found this video helpful, like, subscribe, and don't forget to check out and join my Discord for more strategies, trade alerts, and live coaching. Let's crush 2025 together. See you in the next one. Peace.